All right, so today we're joined by Craig Salm, head of legal at Grayscale Investments, to kind of chat with us about anything that goes into where we're headed with the future of cryptocurrency. Now, before we introduce our guests and dive more into these conversations with Grayscale, the quick reminder here that all investments, as well as strategies discussed in this video, are not recommendations and are for informational purposes only. Investing in cryptocurrency carries a significant risk. So I wanted to start out and kind of just give you a chance to talk about Grayscale and kind of the history of where Grayscale comes into play, because you see them all over the news today with the Bitcoin ETF, recent news on other crypto ETFs. What's Grayscale's role in crypto future?
Yep. So Grayscale is a digital currency asset manager. We're the largest in the world today, managing about $50 billion, give or take, across a family of now 16 different investment products. And what we're really doing is offering access and exposure to the digital currency asset class in the form of a security. And so today, as you may know, cryptocurrencies are not like other assets, whether it's stocks, bonds, commodities, currencies, or any other type of asset, because they really were formed in a world with marketplaces all over the world. It's truly digital, and it's really just a new type of asset that investors want different ways to get exposure to.
So what did Grayscale see, I guess, going back a few years, let's say, before Bitcoin was all over the news, before crypto was all over the news? What did Grayscale really see that led you to where you are today as pretty much ahead of the game in terms of major, brokerage firms that offer this type of investment?
Unlike the world that existed before cryptocurrencies, which today you may hear as Web 2.0, where you had a select group of companies that really had full ownership over information, social, search, and those key uses of the internet. So those are firms like Facebook and Google and Twitter. Web 3.0 really disintermediates the internet in that you don't have companies that are responsible for all the products and services, but rather protocols. And the way that you gain exposure to those protocols is by investing in the underlying tokens that power those protocols. So that's why Grayscale chose to focus on the digital currencies themselves as the way to gain exposure to this asset class, because it really is the most pure way to really invest in it.
Can you just talk a little bit about the main Grayscale Bitcoin Trust Fund that maybe the majority of our viewers might know about, and kind of what it is, what it does, and everything from there?
Sure. So Bitcoin was the first digital currency. It's really the most well-known currency, of course, was invented about 11 years ago. And what Bitcoin did was allow anybody to transfer value over the internet. But when Grayscale started, that was the only digital currency that really existed at the time. And so what Grayscale did was create this investment vehicle around Bitcoin that gives investors passive, long-only exposure to just Bitcoin. So today that product is called Grayscale Bitcoin Trust. It trades under the ticker symbol GBTC, and it's the largest Bitcoin investment vehicle in the world with about $40 billion in assets. It holds about 3.5% of all Bitcoin outstanding. It's the highest volume traded Bitcoin security in the world, trading hundreds of millions of dollars a day on the over-the-counter markets. And it represents the holdings of about over 600,000 investors across all states in the US and territories. So it's become a very successful investment vehicle and allowed a large amount of investors in the US, as well as some investors abroad, to gain access to Bitcoin. Investing in Bitcoin without vehicles like GBTC involves going to an exchange or an online trading platform, which you may never have heard of. It might be in a jurisdiction that you're not comfortable with. You don't necessarily know who are the operators of that exchange, and you're giving your identification and other really important information to them. So products like Grayscale really remove a lot of that uncertainty and discomfort and make the investment in Bitcoin look like any other security or other type of asset.
I did a video on kind of Bitcoin ETF when the futures ETFs were approved back in October. And I talked about how I didn't think futures ETFs necessarily were the right type of investment for our YouTube audience or just any young investor basically get exposure to crypto. Can you talk a little bit about futures ETFs and then talk about how the spot ETF that we're working towards might solve some of those issues that you and I might have with that?
Grayscale's products are offering exposure to cryptocurrency in a spot or physical form. And I quote physical because cryptocurrencies obviously are very much non-physical, but that's the level of exposure that we offer, which is the pure cryptocurrency assets. But there's other ways to gain exposure through derivatives of cryptocurrencies, and one method is through futures. And what a futures is a contract between two parties where you're agreeing to the price of an asset at some future date. And so in the US as well as around the world, we have futures markets for commodities in corn, oil, wheat, and also Bitcoin. And where those contracts trade are on exchanges that are regulated in more ways than the underlying Bitcoin markets. For instance, in the US, the Chicago Mercantile Exchange is the largest commodities futures exchange and most regulated in the US. And there's Bitcoin futures that trade there. One of the issues with gaining exposure to Bitcoin through these futures is that they don't necessarily track the price of Bitcoin month to month, because unlike holding a Bitcoin, which you can just hold indefinitely and never have to sell or do anything with to maintain your exposure, futures contracts are for a certain period of time. And when you get to the end of that period of time, you have to buy the next month of futures contracts. And there can be problems where if the next month of contracts that you have to buy into and sell the existing ones, if they're more expensive than the current month, then you get something called roll costs. It's rolling because you're rolling the contracts forward. And these costs can add up to the point where you're no longer tracking the price of the underlying Bitcoin. And in the case of Bitcoin futures versus Bitcoin spot, historical numbers show that there's deviations as large as 10%. So if you're looking to invest in Bitcoin over a long period of time, that can really add up. And it just goes to show that it's not necessarily the most ideal way to gain your Bitcoin exposure. On the other hand, some investors, don't want to worry about the underlying Bitcoin. They don't want to worry about custodying it or any of the other risks that come with that. And so they're happy to invest in the futures. And I think the point is really investors should have as many ways to gain exposure to any asset, whether it's Bitcoin, Ethereum, or something else, as they can, because every investor is going to have different styles and investment objectives and considerations. In the US, we had a very important event take place over the summer where we saw the first Bitcoin futures-based ETF be approved. And that's a very positive step forward in the industry because it results in more types of investors being able to invest in Bitcoin. But there's still more that we would like to see. For instance, our own GBTC vehicle converting into an ETF, because we think that's yet another really great way to gain the exposure to Bitcoin.
You want to give the retail investor the ability to not have to set up some separate wallet, open a new app, but to be able to invest in this through a regular brokerage account. What's holding that process back that you just talked about, converting the trust to an ETF, and just overall the whole industry not being able to actually release that spot ETF that everyone's kind of waiting for?
This whole process started way back in 2013, actually. That's when the first Bitcoin ETF application was filed. You then fast forward to 2017, where Grayscale, as well as a couple of other peer firms, had applications with the SEC to have a Bitcoin ETF approved. And the important thing there was that at that time, you had both spot-based ETF applications like GBTC, as well as futures-based applications filed. Ultimately, the SEC determined that the Bitcoin markets were not yet ready for an ETF. And they probably were, they had good reasons at the time. Bitcoin trading was still very new. It was taking place in a lot of different jurisdictions and not necessarily mainly in the US. And at that time, the SEC cited the potential for fraud and manipulation in the underlying Bitcoin markets as their reason why they were not approving either spot-based or futures-based ETF applications. And from 2017 to the present date, Grayscale has gone in to meet with the SEC several times to talk about Grayscale, GBTC, what we're seeing in the markets, what we're seeing in terms of developments in custody and pricing and all the different features that go into an ETF. And we've had very good engagement with them. And so it's really an ongoing process that ultimately is a matter of when, not a matter of if, but certainly a process that's been taking place over the years. And the recent event that took place, which I mentioned, is that the futures-based ETFs were approved. That was really interesting to us because if you recall, the issue with the ETFs has always been about the underlying pricing of Bitcoin, not necessarily the method of gaining exposure to Bitcoin. And that's important because the futures-based the futures-based contracts for Bitcoin are priced based on spot exchanges. So if you think that there's a problem with the pricing on the spot exchanges, well, that's going to affect the spot Bitcoin price and the futures-based Bitcoin price. And to really drive that point home, the CME Bitcoin futures, which is the product that's inside of the futures-based ETF, is priced based on the exchange's Coinbase, Kraken, Bitstamp, and Itbit and Gemini. Those spot exchanges, Coinbase, Kraken, and Bitstamp, are the same exchanges that products like Grayscale uses to price our own Bitcoin product. So it's an inconsistency there in having the futures-based ETF be approved, but not the spot-based ETF.
Grayscale's working towards this. I think the average millennial or under Gen Z investor wants the ability to invest in cryptocurrency, especially Bitcoin, through an ETF, through an easy way, very easy way to get exposure. So now I want to ask you, what's your best guess or what's your sense of this timeline? How much longer does someone like me or you have to wait to where you can actually buy a Bitcoin ETF through Grayscale?
It's definitely a matter of when, not a matter of if. And in terms of timeline, the process that Grayscale is currently undergoing is through something called a Form 19B4. And there's a prescribed timeline for that whole process, which overall is 240 days, with periods in between where the SEC can either approve, disapprove, or delay and seek further comment from the market. So anybody can send in comment letters to the SEC arguing why they think this particular ETF should or should not be approved. And the great thing about this process is the SEC is required to read and respond to all of those letters that come in. So it's a really great way for US investors to have their voice be heard and really be a part of this whole process. And so, as I mentioned, it's 240 days for Grayscale and for the GBTC ETF conversion. That takes us out to July 6th. And in the meantime, we're looking forward to engaging with the SEC, seeing all the response letters that come in, as well as their responses to those.
So is there anything else, I look back at like the history of the stock market, and we've probably gone through something like this where there's been a new investment that the SEC has had to really learn about and accept and understand before they actually approve it. Is there a good example that you can talk about where this actually has happened in the past and they successfully approved some kind of new investment like this?
In terms of a new asset class, there really isn't a precedent because cryptocurrency is the first asset class that was invented since the ETF was invented. It's truly novel in that sense. I suppose a comparison would be some of the creative investment objectives and strategies that have come up over the years through ETFs, such as levered ETFs and inverse ETFs. Those are novel in the sense that it's something that was not more traditional ETF of just holding long passive only exposure. I think that's probably the best comparison. And those types of ETFs did take several years to ultimately get the approvals that they needed from the SEC. And I imagine that issuers were going in to meet with the commission, explaining how the product would work, how the authorized participants would interact with it, what sort of guardrails and investor protections were in place to ultimately get them comfortable. And that's probably the most analogous situation to what we're seeing here with the Bitcoin ETF. And then eventually we'll have with an Ethereum ETF and ETFs for all the other cryptocurrencies that are out there.
What's the biggest benefit that the average investor would see once, let's go to July or August, maybe 2022, let's hopefully assume that it gets approved, so it's on the market, the everyday investor wakes up and they can actually buy this in an ETF. What's the benefit of being able to do that versus what they have readily available right now in 2021?
In terms of what an ETF would do for investors, I would say first and foremost, it just opens up the universe of investors that can invest in Bitcoin, because for some investors, it has to be an ETF. They can't get exposure spot or through other types of structured investment vehicles. Secondly, an ETF tracks an underlying asset's net asset value, which is not necessarily the case for over-the-counter listed products like GBTC and other vehicles out there. And then thirdly, there's tax benefits that you have in the ETF that you don't have with other investment vehicles, as well as benefits for certain retirement accounts. Thinking about the Grayscale product lifecycle model of starting with a private placement, getting the public quotation, making the product SEC reporting, and then converting into an ETF, each one of those stages creates more access and more opportunities to gain exposure to the investment vehicles, because certain types of investors, whether you're institutional or of a certain regulation or a 401k or another retirement account, there's different types of restrictions that prevent them from investing in investment vehicles. And there's certain investors where they can't invest in Bitcoin unless it's in an ETF. It's important for investors to have choice, especially if you can invest in Bitcoin, but for the existence of an ETF.
Thank you so much, Craig, for joining. This was super interesting. We hope to see you again soon.
Awesome. Yeah. Thank you so much for having me, Tony.